So there's a lot of things that's going on, my brother Darius, in the crypto markets. As everybody can see, there's a lot of things that Trump has done. There's a lot of things that we're seeing overseas. Um, my first question that I want to ask to you is, where do you think we go from here, just as a traditional crypto investor? What are the things that you're looking at for this year in 2025? What are the narratives that you're really hearing out there that you can see that is going to do well? And what is the government doing now, especially, me and you have been talking about with the SEC. Talk a little bit about how ETFs are now coming on board with Solana and other layer one tokens, Ethereum alike. We already know Ethereum's already got a spot, Ethereum ETF. Just talk a little bit about the climate, what's going on, what's happening in our government, but then also abroad, and kind of give everybody a high level breakdown of some of the news that's happening that's going to change their life as an investor, because these new regulations is really going to cause us to have to think a little bit differently as an investor, especially invested in this crypto market for a long time. So, what are you seeing? What do you think about that?
Yeah, this makes me think of a couple of things. It makes me think, well, as of today, the Senate passed the Genius Act. A lot of people should pay attention and look what that actually means and what the government is now going to be doing when it comes to the realm of stablecoins. But it also, with this regulation, it makes me think of the crypto 4 year cycle. Right now, we know that crypto is a 4 year cycle that uh, it has a high and then it comes back down, and then you got to wait another 4 years before you get another all-time high when it comes to Bitcoin. With this new government regulation and these new investment equities being created, I think it brings a little bit more stability in a highly volatile asset that is looked at right now. Uh, most, if you look at most older citizens and the reason why they don't want to get into crypto and Bitcoin, they think it's volatile. But the creation of ETFs, exchange traded funds, you have these large equity groups like JP Morgan Chase, who actually came out today uh, uh, describing that they will be moving on chain and creating their own stable coin. It just confirms that more money is coming in because you have these financial institutions like JP Morgan Chase. They move trillions of dollars daily, and now they want to create their own stable coin to move trillions of dollars daily. Um, what you see and what has passed in the Genius Act is for these entities that want to produce a stable coin, they must have a one-for-one backing of basically U.S. Uh, balance of cash and deposit and treasury instruments. So let's say if they had, if they had a trillion uh, tokens in their stable coin, they must have that one for one backing. So they have to have $1 trillion in cash assets, uh, treasury deposits, or treasury instruments. So it's going to bring more liquidity into the the crypto economy. What we now see that economy is getting built out. Uh, right now, the retail investors are the ones that's making the markets move, but now governments are coming in. People like J.P. Morgan Chase, BlackRock, these institutions with trillions of dollars of funds, trillions of dollars in liquidity, trillions of dollars of assets under management are going to be coming into the crypto space. And it's going to, in my opinion, it's going to make this boom. Right now, there's only a crypto's a $3 trillion market cap. I definitely see, you know, it easily can get to $10 trillion, in the next couple of years with with these new guidelines being set forth. How do you see it?
I think that's a positive look at it. One of the things that we've always been asking for in the crypto world is basically some type of regulatory clarity. And like I know, just being out here in the field, just as a crypto enthusiast, not even as an investor, the average crypto stan hates the word regulations, right? But regulations is powerful because it helps basically integrate this stable coin, I'll call it infrastructure, into the mainstream, right? So now we have this clarity that now mainstream financial systems can now adopt stable coins and create their own stable coins, right? So it makes market legitimacy. That's the first thing. The second thing, it levels the playing field, right? And America is a place where we love competition, right? And so as you see USDT Tether, USDC, which is a USDC coin, now they have to comply with these regulatory rules, right? And so any of these smaller stable coin companies, they now have to really decrease because now any of these like offshore competitors, we now have regulations in America saying these are the guidelines for you to play ball, right? So now we're going to get a huge institutional increase, right? You're going to start to see, like you said, banks and retailers, they're going to issue stable coins, right, under the guidelines that has been set by the Senate. So that's going to create, for me, I'm just thinking market growth and a dollar dominance. You know, just like I know, you're starting to see what the dollar has done compared to all the other baskets of the top countries over the last couple of months. You've seen it go down 10% and then another five. So this is really going to have a lot of people starting to want to have dollars again. And in an environment where we're seeing that the Fed is not going to lower rates probably until the end of the year. I've been one of the people that's been saying that it's probably not going to get to maybe the end of third. We're probably seeing fourth quarter. And really, as a consumer, you have to think that if the Feds are going to lower rates at the end of the year, then that means it's going to be more expensive for credit, right? Credit is going to be more expensive, debt is going to be more expensive. And we know just with all of the geopolitical things that are going on in the economy, debt does not need to be expensive. I think we're paying, you could correct me if I'm wrong right now, I think we're paying somewhere like $100 billion every month um for the deficit for our debt.
In interest?
Yeah, and interest. I think it's about 1.2 trillion a year because it just the interest rates just went up on that double. So yeah, it was 50 billion. So we're playing like close to like 100 billion a month, especially with these other countries, paying back off these treasuries. And so the country really cannot operate or do business where we're at. So I think crypto as an investor, you have the ability to be protected that now with this new regulatory guidance by the Senate, we now have the ability to use crypto as a hedge of inflation and protection against whatever the country is going to do. And I think that's a positive move. And I think more and more corporations are going to get involved. I think you know better than me that more banks, more corporations, and more TradFi, which is traditional finance, is going to get involved now that the regulatory guidance is there. And that's all they've been waiting for. And is there anything else that you've been seeing for us on the side with how Bitcoin has been moving with this war with Iran and and Israel? Because a lot of people have been calling me about that, about it's about 100 something billion has been taken out of the market, and people are saying like, what's going to happen with that? Is that going to be a negative impact on some of our projections for the end of the year at 150 Bitcoin or 200 Bitcoin? I'm like, not too much. I don't think it's going to do too much. What are you seeing? What do you think? how is this war going to affect the trajectory of Bitcoin? Do you see any deterrence from Bitcoin reaching some of the targets that most people on the street are saying?
Right now, Bitcoin price is around 104, 105,000. I kind of see it as it's maintained itself. When you think about it, it's now been over a month since it cracked 100,000 per coin for the second time, and I see the stability of it. I see, some people are running and trying to get fiat currency and just trying to make sure they have money just in case, this war uh, turns into something bigger than what it is right now. But I also see people are running to crypto and Bitcoin to store their value. So right now, I think it's pretty even. As in the end of year goal, I still see Bitcoin to be in the 150 to 200,000 per coin range because you have people coming online. Like you said, this stable coin regulation is going to force people to buy into uh, these ecosystems that are going to form. You even had Amazon and Walmart think about creating a stable coin. So those are two massive industries. Like you have Amazon, just the head of e-commerce, and you have Walmart. They're probably the head of regular commerce as it comes to everyday needs in a physical sense. And if these two entities create their own stable coin and back it with the U.S. dollar, that means the U.S. dollar is going to be strong, and I think people are going to see that in the economy, and that's going to keep the economy stable, which people are going to, start to be more concerned, more consumers, and start to, buy into different assets again. So I think the war kind of plays a part in it, but it still also drives people into to save their money that they have. So people are going to be running to stores of values. They run the gold, they're going to run the silver, but Bitcoin is the best option for them to actually be able to store that value. And just imagine if you're in Iraq or in Israel right now, and you wanted to move all your money into gold, and you have to leave the country. You're not going to be able to leave the country with a whole bunch of gold on you and on an airplane. It's not going to be allowed. But you could leave with your crypto, and you can leave intact, and you know carry all your value with you. So that's one of the advantages of having cryptocurrency. You can never be without the value of your money and your currency. So I think once people start to see that, and again they see that it's getting more and more stable with these large entities creating their own ecosystems and own blockchains and own stable coins, it's just going to just renew the consumer to realize cryptocurrency is a viable option, most likely, possibly their best option. You have anything to add on that? And you guys that are on now, you can also, write something in the chat, ask a question on the news we just presented to you.
Yeah, that's only one thing I wanted to add on to that, my brother. Like you said, I think a lot of people, when you hear the V word, volatility, they get scared at that. But volatility is a natural process for a healthy market, right? With any asset, you need volatility. And so this short-term retraction, following the Israeli airstrike on January 13th, this is basically it's a typical risk-off move, right? Traders are over leveraged, and because they're over leveraged, they're the first ones to get X'd out the market. And I think that's basically what we've seen. I don't think that really messed with any macroeconomic indicators according to Bitcoin because we've seen the rebound go to like 109, 10. So you see that 7% recovery after the shock. And then you started to see that there's always going to be some type of volatility under geopolitical risk. That happens with the stock market. So I don't look at that being a situation. I do believe, though, this is where I just differ a little bit. I do believe if Trump puts us in this conflict with Iran, that Bitcoin in the short term could fall another 5 to 8%. That's just because it kind of entails with the Nasdaq and these technology stocks are doing. So they kind of go hand in hand. And so that's the only thing that I've been seeing, really. That if and I don't believe that we're going to get into this conflict too heavy. It's me personally. Anything could happen because with our president, anything could happen. But I just think that if that were to happen, I don't think it will diminish our long term goals, but just on the short term, I think we can have a possible pullback. Um, I don't want the thing about it is just I'm kind of upset at the Fed a little bit. I understand that we have a lot of factors that are happening, especially with mass layoffs in our country, and they just don't want to overshoot the gun. But that's one of my things about the Fed. They are always late to the party. And we really do. We really, really, really need. We really need um, a rate cut. We really need a substantial
Yes.
rate cut. And you know it to be true. We really need one, and we started to see other governments, even in Europe, are starting to say, you know what, we're not going to wait on America for this, because our economy and American economy, as we're seeing now, is not being correlated anymore, right? So a lot of these other countries are saying, yeah, we're going to cut rates just because we need to focus on our economy doing well. And I think we've always been, as long as I've been watching the Fed, they've always been late to the party. They have that measure twice, cut once approach, and it works out sometimes, but usually it doesn't work out. So that's the thing that I'm looking at, my brother. The only thing that I want to talk to you before you get into the analysis and start talking to the people. Um, Raul Paul, and I know we watched this. He talked about the global liquidity. You and I know what M2 supply is, but a lot of people don't know what M2 money supply is. Can you kind of break down what the M2 money supply is? Basically, all the money in circulation. That's the cash and checking deposits, savings accounts, money market security, and kind of tell people when there's more money in the economy, how that's a positive sign for Bitcoin. Because I think a lot of crypto investors don't understand that every time America increases its money supply, then people are going to use that cash to invest in high yielding assets to make money. And we know that Bitcoin produces a lot of yield, not on a dividend, but the asset itself produces a lot of yield. You go over the last 2 years, it's up somewhat, still 85%. So, can you talk a little bit about how the increase of the M2 supply affects Bitcoin and how this is a positive thing, even though as a consumer, it's negative? Because we know the government prints more money, then everything's prices always continue to rise more and more. But if you're investing in Bitcoin, tell them the benefits of investing in Bitcoin if the government is going to raise, and they will always continue to raise the M2 money supply. If you could just talk about that in the next 3 5 minutes, and then you good to go. I decrease and you increase.
All right, that's good. Like, you gave me a good breakdown. Like the global M2 money supply. So if you guys want to look this up, just type in global M2, on your Googles, Chat GPT. It's around $110 trillion. And what that number signifies is what you said, the numbers that are in, bank records when it comes to checking deposits and savings, just just like bank statements and other banks around the globe. So it's just like a total accumulation of the liquid money that we have that's in circulation that could be used or spent or that's in the savings and stuff like that. So when you think about it, uh, and you named it, these other countries and these other entities that have central banks, they all work in like an orchestra. So usually, like you said, if America drops its rates, the other countries they follow. But what has happened is, like you said, the other countries have dropped their rates, like Europe, but America has held out. So it's kind of stagnated our economy per se. But I know people remember the 2020 Trump checks, the stimulus checks, and what that done to the price of Bitcoin. Uh, so during 2020, everybody got the stimulus check. There was a total of around $7 trillion printed from that. Uh, so there was a lot more money supply out there in the economy. Stuff was, the economy was booming. Everything was hot. The prices of homes, people were buying, selling homes like crazy, buying luxury cars, buying luxury, you know, clothes and everything because of the stimulus check. And what else went up was assets, like you said, high yield assets. Um, Bitcoin, was at, I want to say like 15, 17,000 earlier that year. Then it reached all the way up to 67, 65, 67,000. So we saw more people have more money. So they kind of took that extra money and decided to buy assets that normally people don't buy. You know, uh, when the economy is not good, people stay away from Bitcoin or any type of asset that uh, kind of follows that trend. Even when people look at in the economy, they look at how many people play in the lottery. If the economy is going pretty good, uh, not as many people will play the lottery. Lottery when the economy is bad, people kind of play it more, but also they don't have the money to spend, so they stay away from things like that. And what the global M2 will show you, it usually follows the price of Bitcoin. Like you said, Raul Powell is a macro investor that kind of uh, was able to be the first person who's seen this trend happen. That when you add more money in the global M2, the price of Bitcoin literally kind of follows it as like at like a 95, 97% correlation. So, and I use this analogy a lot when it comes to like the economy and how inflation works specifically. Say me and you had a water company and the money supply was to the effect that everybody in uh, that was trying to buy the water could only afford $1. They may not have that much money in their in their possession, so maybe they can afford $1. Uh, we could sell it at $1. We could sell it less because we want to make sure that our customers can come back and buy our water. But if the money supply expands and say everybody that needs to buy the water, has hundreds of dollars, you know, we can sell it at, $25 for the same water. That's how you break it down to a simple, you add more money to the money supply, inflation goes up. So it kind of works that simple, but it's very, nuanced when you talk about global and macro economics because not only uh, is that inflation affecting us in America, but it's different inflation in Europe, different inflation in Central America, South America, different inflation in Japan, different inflation in China, which everybody uses the US dollar as the world reserve currency. So they need they need a weaker US dollar to actually service their debt because their debt is issued in US uh, dollar currencies. So that's kind of a short, brief synopsis of global M2 and money supply and how that affects the economy and how it affects people going to buy Bitcoin and into crypto.
That's it. That you said it, my brother. And to simplify everything you said, basically, if there's an abundance of money, right? Money is cheap and flowing, buy Bitcoin, even through global tensions. So basically, once the Fed lower rates, you're going to see it's going to be a party like 1926. And people are going to be pumping a lot of money into these assets. And so we're going to see a rate cut, I believe, sometime this year. When will that happen? I have no idea. And I don't think anybody knows. I'm
Yeah,
more on
that's
fourth quarter. I don't know what Powell is doing over there, but I'm more of a fourth quarter guy saying is that, but nobody really knows. But my brother, I thank you for those 30 minutes. I think that was a wealth of information that everybody received, and they're gonna have to really go and really digest that on the YouTube. My brother, without further ado, whatever you have for the people today, I'm excited to just be a listener. If you need me to chime in on anything, I'm right here, but I'm just excited to listen. Every time I hear you talk, man, I'm excited. So whatever you got for the people, files or whatever you want to say, whatever you want to teach them, the floor is yours.
all right. Thank you for that introduction. And really, it's uh, us flowing off each other makes me think of all this stuff in a different way to explain it for our group. And what I want to go over today is we'll be going over the difference between private and public key. And if you want to chime in on that, Leonard, you can. Um, but I'm just going to go into just a quick little brief synopsis of it. So, what we want people to understand when it comes to crypto is, once you set up your accounts and you move money into a crypto account, what you want to do is you definitely want to study how to move your crypto. That's definitely number one. I know a lot of people they get directly into investing in crypto and they never actually send people money when it comes to crypto, and that's the whole part of the technology is for you to be actual actually able to send money to anybody across the globe who has, a crypto address. So within that, you have a public key and you have a private key. So as we know, this is some quick vocabulary to go back over. But as we know, cryptocurrency is a digital currency that works without a bank and it uses cryptography. And then we're going to talk about wallets. So, a wallet is a digital tool to store, send, and receive cryptocurrency. So, that's what we're going to be talking about a little bit today. Public key, just think of it like an email address. You can share your email address with anybody. They can send you an email, and it's for the public consumption. If somebody has your email address, uh, it's not too um, it's not too much of a security uh, that somebody has your email address. Now, a private key. So a private key is like a password or like a secret pin, say like a pin to your bank account. That's something that you would never share. And if somebody had that information, it would definitely be uh, not okay on your behalf because they have access to move your crypto. They have access to, steal all your money that you worked for and earned over, your investing time period. So you need to understand the difference between the public key and the private key. And then also, this refers back to the blockchain. So A digital ledger where all cryptocurrency transactions are recorded. So on a blockchain, most blockchains, when there's a transaction that occurs, you can see each public address or public key uh, that the wallet that the money was the cryptocurrency was sent from to and who received it. So your public key is out there on the blockchain. So if I was able to send Leonard $100 in Bitcoin on the Bitcoin blockchain, they would see my public address sending it to Leonard's public address. So my public key sending it to his public key. So this simple as me sending him an email and him receiving that email. And so when you're thinking of it like that, it's very simple. And like you said, people most likely when you send crypto, you're going to send your public key to them so they can send their crypto to you.
Quick question,
Uh,
Darius. Can I just for maybe the people who don't know, can I just show them real quickly like what a public key will look like?
yes, that's perfect. Actually, yeah, that's perfect.
Yeah, so what I'm gonna do is I'm gonna go to my I ain't gonna well this is a little dummy account. It really doesn't matter about the money that's in there. I'm gonna send the show them what my public key will look like. I'm gonna connect to my Exodus right real quick. So this is my Exodus account, and this is my. Can everybody see this? Can you see this, Darius?
Yes, I can see it.
So
Yes,
so those letters in green basically is the public keys that anybody in the world, of course, this is Solana, they can send you money. If they have this address or they have this QR code, anybody in the world could send you money. Now, you don't want nobody to know your private keys because they could take all your money. But just having this public key, all they can do is use this pretty much to send you funds. And so if they have this key, which is, I don't know, what is it, 30 letters, the numbers,
yeah,
and
something like that.
QR code, um, they can send you money. I'll tell you a crazy story. I was actually one of the first people in 2000, my freshman year. Darius know this story. Well, I purchased 10 Bitcoin, but the QR codes, there was this company called BitMax or BitMart back in the day, where you would PayPal them um, for the public key, and they would give it to you, and then you had to write it down either on a USB or on a piece of paper. Well, nobody didn't know what this stuff was, and this stuff was since at this time. So, yes, I am one of the crazy people that have $1 million in Bitcoin somewhere that is basically lost that I would never find because my professor, Dr. Nazir Mustafa, told us to buy it my freshman year in macroeconomics class. But we just did it because it was fun. I was just one of those nerd, people to do it because it was fun. But yeah, man, I think about that all the time, man. Me and you, we be chilling somewhere right now, Anguilla or somewhere.
Yeah, man, we could be
With
doing
that
this from a
Bitcoin.
yacht somewhere.
Look at look at Diamond. She said, "Lord, let him find it."
Yeah.
I don't know. I don't remember, but I do think about that. I'm just like, man, if I were to remember those numbers verbatim, that would have been a good
Yeah.
time, man. It's crazy to think about, but nobody knew what it was going to
Hmm.
be. Anybody telling you in 2011 they knew what Bitcoin was? Nobody knew what it was. Like it was just a phenomenon at the time. But I didn't mean to cut you off. I just wanted people to show them that as they get equated to them, that's what a private key looks like. So you can continue.
That's a good story, and it also shows people to really be able to safeguard and safe keep your information once you get into becoming a crypto investor. Because once you lose it, it's gone. I mean, it still exists, but it's gone. So that's it for example of public keys, and kind of like what he was saying. It's a long string of letters and numbers. You can share it with others so they can send you cryptocurrency, and you just think of it like an email address or home address. And it's a private key. Basically, it's very similar. Uh, I know Leonard may not show you an example of that, but it's another just long string of letters and numbers. So, but it gives you the full control over your crypto. So, basically, you must never share it. If anyone gets it, they can just steal your money, without you doing anything about it. It's kind of like somebody stealing your bank account information and having your address in your social security and everything. So you must always keep that private, if you want to tell some loved ones and stuff like that. But you definitely want to keep that in wraps. So you want to think of it like that's your bank call your bank vault code. So definitely want to stress that is very important to never share. Not even to me and Leonard. So uh, we're going to go into how they work together. If you want to add anything to that, Leonard, if not.
Yeah, so basically, like Dara said, public keys is address that others can send you. Private key is basically self-explanatory. It's your secret password. It lets you unlock and basically port your crypto into your crypto accounts. Um, so just like Dara said, I'm gonna just be 30 seconds. Imagine your crypto wallet is like a mailbox. Your public keys is the mailing address, right? Anyone can know it. People can use it to send you letters. It's safe to share with anybody. Your private key is the key to open the mailbox. So it's basically like your email password. Only you should have it. It lets you open the box and take the money out. Just like, your password lets you look at your email. And if someone else gets it, they can steal your mail. They can know all your valuable information. So if somebody steal your email password, if you out here buying all kind of wild stuff or whatever, people will know your identity and make you look bad or whatever, or take money out your bank account or whatever. Same thing with crypto. If people know your private keys, they can steal your crypto, and there ain't nothing really you can do about it. So definitely always hold on to your private keys. Um, I don't know what direction you want to go into, my brother, and you can go to any direction, but I just want to
Oh,
say,
yeah, I was just showing how they work together, but you kind of explained that. So, but yeah, so your wallet it uses the private key to create a digital signature. So think of it like that, and then and this basically proves that you are the authorized user, and then it authorizes the transactions with you, and then it doesn't reveal your private key. So this is kind of what the technology is doing for you. And then basically what that after that happens, you get verified by your digital signature and before it uses your public key. So that's kind of what the technology is doing on the back end. And then let me see where else do I want to go to with that. Mm, Oh, okay. We could go into C phrases if you want to. You want to share anything about C phrase?
seed phrases is the bane of my existence. I hate them so much, but I understand. It's needed. So basically, seed phrases is just a very unique code. It's a unique. Think of it as multiple separate passwords um, that is used at random to be able to create autonomy, so nobody can get into your account. So usually when we do a password, and my girlfriend's on here, so Diamond already knows that every bank account that I have, it's easy, Darius, to really hack me because all my accounts have the same password. So,
Mm,
I got probably maybe 5 bank accounts. and then multiple ones of even Josh laughing at me because he's probably like, man, yeah. He said I work in encryption and decryption. He's like, yeah, you probably a great lick. Look at everybody saying I'm a lick. That's funny. That is, but I am because I just try to keep life simple. So all my pin codes are the same. All my this is very horrible to say. All my pin codes are the same. All my email address passwords are the same, and all of my crypto. Well, my crypto is not the same, but my all my password on Exodus are the same. But my seed phrase, I don't like it, Darius, because it's 12 different letters, and I got my like
Mm,
9 or 10 different crypto accounts because we got all kind of wallets,
yeah.
Phantom wallets, Solana, Ethereum wallets with MetaMask and
Hmm.
Exodus. So they got all these different seed phrases. So I gotta remember all these. I got them in journals and stuff. So basically, it's just random words that is not connected to your memory. So you don't have any, because if people know what you like or what they could easily, steal it. So for security purposes, it's just a random 10 words, 12 words actually, or some of them
Yeah.
don't matter which one.
Hmm.
It's a was selected at lottery at random, and they give you 12 words to have access to your account just in case you get out of your account. And Darius can be more technical, and he can tell you actually what it's about. But that's basically what a seed phrase is. But yes, I don't like it. I understand. It protects me, even though I don't like it, because if I didn't have a seed phrase, I'd have probably been one of the first people in crypto to be robbed because it'd been easy to take my money. So I
Uh,
appreciate it now. So my brother, you can continue.
yeah, I was gonna say a little bit more technical. Just C phrases is also called the recovery phrase. So they're just important. It's just as important as your private keys. So you gotta think about that. It's like a master password for you and your crypto wallet. So this is something you want to write down and keep safe. The best practices are, they say never to screenshot it. So you don't want to just have it in the cloud somewhere and somebody got your seed phrases and stuff like that. Uh, and then also, another best practice is to use hardware wallets. I know that's something that you were just speaking about, and it's something that will store your private keys offline. And then also, this is something that is used to be new, but two-factor authentication, something that's kind of become standard now with a lot of these apps. Just basically being able to authenticate in two different ways when you're using your crypto app or any of these Web3 wallets and stuff like that, just for extra protection on your behalf. And then let me see. Oh yeah, yeah. Just remember, if somebody has your private key, they have your crypto. So I think that's it for the lesson that I wanted to teach today. Because, like I said, a lot of people get into crypto and they want to make money, but they don't know how to protect themselves. It does you no good to become a millionaire off crypto, but you don't know how to properly protect yourself or properly safeguard your assets in crypto. So you want to keep these things in mind as you further your crypto journey, and just keep at it. Like I said, even to get good at it, I was I started sending myself like just a dollar transfer to just to see how this stuff actually works, because you want to know something. You really want to learn this technology because it's life changing. It's not going anywhere, and more fraud is going to happen because of this, and that's the sad thing about it. This is a great technology, and it's going to help out a lot of people. But you always got those people out there who will take advantage of people who don't know any better. So even when it comes to you guys learning these new cryptos out here and learning new assets to put your money in, uh, when you're when you're investing, this is something that you want to think about. And also when you're teaching other people about crypto, you definitely want to stress this. If anybody is not really extra cautious and telling you about safekeeping your crypto and they're around you and want you to invest into another crypto project they heard about, 9 out of 9, you can't trust it. So I think that kind of ends my lesson for tonight. So guys, this is very important. It was a short lesson, but it's probably the most valuable lesson. You know, it's been $1 million lesson for Leonard
Oh,
already.
100%. Oh,
So
sometimes I
definitely want
cry
to
every night.
understand.
Oh my God. You're right. One thing I just wanted to, you to just touch bases on, and everybody, if you have a question, you can either put in the chat or just raise your hand and we're gonna get to you because I know there might be a lot of questions about this. And if you want to set up a wallet, we're gonna get to you in about 30 seconds, Josh. If you want to set up a wallet, we're gonna tell you the ones to set up, the ones that we use. Um, the one that I wanted to talk about a little bit about, my brother, tell them about the difference between like a cold wallet and then like letting like a custodial management like Coinbase hold your wallets and kind of like the pros and cons of that because you know a lot of people that's been the biggest argument between crypto people like oh no keep your keys keep your own keep your because I have a lot of money in Coinbase that I don't have in a private wallet. I have some money in a private wallet, but also just tell them a little bit the pros and the cons of having your money with an exchange, on an exchange, and having your money in a cold wallet, if you can.
Yes, sir. This actually touches back on some of the previous lessons. So, a cold wallet is what you want to look at, also called a hardware wallet. Uh, this is something to where you can have your crypto on that is actually a piece of technology hardware that you can take with you. You own your public key and you own your private keys. So your all of your crypto will be on this cold wallet, and it's offline. It's not hooked up to any exchange. So uh, basically, your coins can't be moved, and it's not hooked up online, so you can't be hacked. So it's a way to make sure that all your crypto is on you as a possession for you. And a lot of the old crypto enthusiasts, they always say not your keys, not your coins, because on the other hand, you have custodial wallets, something like your Coinbase account. So Coinbase will actually custody your private key, and you know you still have your account and everything, but it's technically not your crypto because Coinbase is the one that has your private keys, but you don't have to worry about the same safekeeping issues that you have to worry about when you have a code wallet. You know, keeping up with your seed phrase, making sure you know how to work your code your hardware wallet, um, making sure it's in a safe place. You know, because if if somebody gets all that and you got all that information in one place, you know, somebody, Lord willing, doesn't happen. But if somebody enters your home, you know, you have all that stuff in your home in one place, and they take your wallet, your cold storage wallet, you know, it's easy as up and gone, and some you can't trace it. So your wallet is gone, and not until your there's like transactions on the blockchain ledger to where you can probably see your a transaction happen into your private key, I mean your public key, but you wouldn't be able to do anything about it if you didn't know actually where that person is. So having it on your person is definitely Uh, Definitely the best way to have your and actually own your crypto, but it comes with all the security risks of, uh, say per se, like having $100,000 in a vault at home. You know, it's secure, but you know, if there's a break in, it wouldn't be secure because you know somebody can get to it. But I think that's the way to think of it. And like and when you're thinking about somebody like Coinbase custodying your wallet, just think about it. If the U.S. government allows Coinbase to custody their crypto, you pretty much are, or sure bet that is a very secure network. And then with this new legislation, I think they would have the money to back you up if if your crypto is ever lost. So you have that that customer support, you have that fraud support, and you have a reputable name with in Coinbase, and when you think about a custodial wallet. So I think that kind of answers some of the differences between a custodial wallet and a cold wallet.
Yes, sir. At this time, we're gonna take questions. Josh, you can go ahead and unmute yourself at this time. I view you. I see you. What are your questions? What you got for us? Let's see if we can help you out, or a statement or whatever you have. We definitely want to make sure we can get to you. What's your question at this time?
Oh, can you hear me now? There we
Yeah, we
go.
got you.
Okay, I was talking and nothing was happening. Okay. Um, so I got two questions. Number one, for you guys, you mentioned the wallet like quality or whatever or type. So I got MetaMask and I have Coinbase. Is MetaMask good or how do you guys feel about it?
MetaMask is pretty decent. I've started with MetaMask on the, you can use it for the Ethereum chain and the
Hmm.
Binance chain. I've been having it for quite a long time, maybe about 5 years or so.
Okay.
Um, they worked out a lot of bugs. Sometimes it's a little bit buggy.
Yeah,
Um,
it's a little.
but switching out between Ethereum based coins, layer
Mhm.
twos, layer ones, it's pretty decent. I'll give it
Okay.
if I had to rate it 7.5.
Okay.
It gets
I'll
the
keep it.
job done. It may not be the best. It's probably not like a trust wallet or anything like where it's the most secure, but it gets the job done. And if you want to transfer assets, especially on the Ethereum chain or the Binance chain, it gets the job done. You're not going to get hacked or anything. It's pretty decent.
Okay. So you
Coinbase
said a
is
trust
good if you
wallet
just say it again.
is the most secure the trust wallet you said?
Yeah, Trust Wallet is really good. It's a
Okay.
little bit more technical than MetaMask though. So it has this more security, but it's also more technical. So just think about when you're trying to download Trust Wallet, it's just a little bit more technical than MetaMask.
Okay.
Yeah,
Okay. Thank you.
both good wallets though. Both are great wallets. I would give probably Trust maybe 8.5. It's a little bit better than MetaMask personally.
Okay.
What are the ones you're using, Darius? Are you using any online wallets, or you just use?
Right now, I just have like Coinbase wallet, I have Phantom wallet, some coins I couldn't buy off of some of these exchanges. So I went with Phantom, and we're pretty good. Um, Uniswap, I haven't really used it that much, but and what else? Let me go through my apps. Um, I think that's about it right there. Those three.
Yeah, think of the
Yeah.
wallets as like Josh. Think of a wallet like a debit card, right?
Hmm.
Nobody
Hmm.
cares if you have Mastercard or Visa.
Okay.
Long as you have access to your money and the card works, there's no problem. And that's how you got to think about these wallets. There are a couple of smaller ones like Terra and all that. I wouldn't advise you to use those because they're just not proven in their younger chains, and you just don't want to. MetaMask got millions of downloads, so such as Trust. So you should be good. It doesn't really matter, to tell you the truth. But their Trust is a little bit. I've worked with Trust, and Got a chance to do the demos when I went to the Ethereum conference. It's a little bit more secure, but again, MetaMask gets the job done just the same. You're sending money, you're receiving money. You can buy other tokens. It does the job the same.
Okay. Okay. Definitely. Thank you for that.
All right, absolutely.
Um, my other question, if it's okay.
Yeah,
You guys said to do, you said it's like 20, 30 a week is what you should be buying crypto. Like if you were just trying to start out buying it, you said 20, 30 a week, 20 to 30 like US dollars of like your investment. Is that what you said you should start out with?
yeah. Just to get your you want to be able to really interact with the network. So basically, what I would do is find somebody that's around your age. Um, and start like let's say put $5 in, not to invest, but like and say, okay, I'm gonna send you $5 to your public keys. And then kind of just learn how to transact on the network. But if you're gonna invest, yeah, buying Bitcoin or Ethereum or Solana, $30 a week. Because again, with the volatility of the asset, you don't need a lot of money to make money in crypto. You know, I think, Darius started his initial investment was like maybe what 5 to 10 grand, but over time, I started with like peanuts, 2,500, and then built to
Mm-hmm.
like a $3,000 portfolio, and that went to six figures. So you don't really need a lot, especially if you're going to be in this field for 4 years. You're going to get to six figures, and that $30 protects you, right? Because you're not parking a whole bunch of money. We call it dollar cost averaging. You're taking a little bit of your money. Everybody's got $30. That's how much a lunch costs in America. So
Okay.
you take your $30, you invest it in, you start with Bitcoin, you can go to Ethereum, and then keep on investing every week in that, and then you're going to see it grow. And basically, it protects you from the volatility too, because you're not putting a whole bunch of money into these assets. If they go down 10% or 15% or 20% on the month, you really don't feel it because you only put $30 in. So it protects you as an investor. Darius, you got anything else you want to share with Josh about?
Yeah, yeah. Like being like I said, being a investor and a early investor at a young age, we understand people are working with different amounts of money. So you want to invest something that you're not going to be looking around the next day like, oh man, I wish I had that money back. Because when you buy into uh, even in the stock market, the price is going to fluctuate, but you're accounting for that your money is going to make you money.
Mm-hmm.
The only way to outpace inflation, the only way to gain wealth in a society where the currency is getting debased is to invest your money. If you don't do that, you'll 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 end up, working your whole life and staying in the same class, maybe even dropping to the lower class because you can't save your way to wealth,
Mm-hmm.
and that's something that we're trying to preach. So
Yeah.
you just have to understand this is a long-term process. Everybody here hopefully wants to live to 80, 90, 100 years old. So when you're that, when you're thinking long term, you're thinking for your older self. Like, do you still want to be working at 70, or do you want to be chilling, watching your grandkids? But if you don't invest, I guarantee you, 100%, you're still gonna be working. So
That's the
that's why I
truth.
want to add.
That's the truest statement. And just to add on that, like Darius said, Josh, just think about it like this: the government really is your enemy, and they're your enemy because they're pumping more money into the economy. If they're pumping more money into the economy, and you already know that wages are not increasing at a rapid rate, but
Mm-hmm.
we're increasing. You're seeing it every day as an
Yeah.
American. You're seeing eggs are $18 for like a dozen. You're seeing the shirt that you bought for 30 now becomes 60. You're seeing the gas that you put in the car 50 now becomes 65. So expenses are increasing. So you have to do something to combat that. And crypto is just something that's going to redeem the time for you. And this is why me and Darius like it. Like we've been through every single season of crypto from the highs to the lows. And what we can tell you, if you're willing to stay in this asset for at least 3 to 4 years, you're going to come out on the positive side. And I'm going to tell you why. It's because the new generation of crypto investors who are going to come after you, they're going to have to buy those assets from you. And they're going to have to buy it from you at a considerable higher price than when you bought it from. And so if we get another 100 million or 200 million or 300 million people buying crypto, and it's going to happen, just think about you buy Bitcoin at 100,000, and then in the next 5 to 7 years, Bitcoin is $1 million, and you just buy $10,000 over the next 4 years. You're 10 times your money, right? Because you buy 10,000, which is a tenth of a Bitcoin. Bitcoin goes to a million. That means that 10,000 becomes 100,000, right? Me and Darius was around when Bitcoin. Well, I was around probably the lowest, probably about maybe 7 or 8 grand. I'm sure Darius was probably around that time as well. And we've seen his asset go up 12-fold. So we just let you know what's going to happen. And the reason why it's going to happen, every government has to print money to make sure the infrastructure of their country and their economy continues to flow. So dollars need to be printed for the blood capital of America and any other country to continue to do business, because how we do business in the world is through credit. You need money for credit. So this is going to be a revolving door. The way that you can beat the government, the way that you can beat the Fed is by investing in highly volatile assets like Bitcoin, like the NASDAQ and tech stocks. And this is why I'm big on both of those things, because while inflation is going to 3 or 4 or 5%, you don't have to worry about that because your money is growing 20, 30, 50, or 100%. And you're just going to be making money hand over fist. But the risk is these are volatile assets. So pumping, I say $30. I don't really know your finances like that. You can do 100, probably can do $100 a week, and it probably won't do anything, to the way you live your life. We just use a number, me and Darius, as a base case. It could be 50, it could be 100. We don't know how much you're making, but whatever you feel like a week that you can park over into Bitcoin or Ethereum or Solana, that you like, you
Mm-hmm.
know what? I'm paying this for lunch. I'm paying this, for gas. I can park this up for a week because this is really not going to, do anything
I
against.
meal prep. I don't spend any money for food. Like I just bake my food ahead of time, so I could do the 100. That's like no big deal. That's cool.
Okay, I just everybody's different, so we just use that as a base case scenario. But yeah, anything that does not really affect your day to day life, like me and Darius, we definitely do 100 a week, sometimes 150, 200. So we just didn't know like your situation. So whatever you feel comfortable with, go ahead and get started and get immersed in. We're here to help you anytime. You have our email addresses. You're connected to the Instagram. You're connected to Zoom. So every week we're here to walk you through it and make sure that you make the right decisions and not the bad decisions, because we did made a lot of crazy decisions trying to find out this space. And don't buy a bunch of them, because you're gonna hear a lot of cryptos, especially in the next 2 months, being created. Buy the ones that you are comfortable with. Start with the top ones now: Bitcoin, Ethereum, Solana. They're good to go. They've been proven. And then um, in the future, start working your way down and start really understanding and knowing the space. And if you ever want to come to a conference, just let me and Darius know. We'll be heading to a conference. Matter of fact, in 2 months, we're going to Hong Kong for the Bitcoin Hong Kong conference, and then we'll be at some other ones too. So if you ever want to come to any one of those to learn more about the space, we have tickets as a part of our company. We can get you a ticket and you can come ride with us. And they have them in Vegas, Denver. The next one will be in, I think the next one me and Darius is going to go to. Well, Darius is getting married, so we can't go to that one. I mean, he's married already, but I'm not telling Darius business, but he got things that he's got to do. So we can't do that one because that's Masari, my brother. But that's the same week that you are having your situation. So we can't even do that. So we'll probably do the one October, which is the consensus conference, and that's going to be in New York. So I don't know how far you are from New York, but if you're in America, that's is probably no longer more than 3 hour, 4 hour flight if you're from the West Coast or East Coast or wherever. So the next one will be New York, and I send that information over to you through email. I have your email, so I send that to you and get you registered. So that'll be no problem. So, uh,
Yeah.
any other questions with anybody else before we sign off?
Yeah, I was gonna say, what he said kind of made me think about shoot, maybe what we can do next week. Most people just don't understand how the money flows in the economy. So when you're looking at these things and what we're telling you about crypto and the stock market is because the money flows through the economy and then also it's a cycle and there also you have to deal with taxes. So if the money is not flowing, the economy is not working, and then the government is always going to come back and get their money for, the infrastructure or the cost of stuff, even the wars that we fight. So the government is going to need their money on the back end when it comes to the money flowing through the economy, just for checks and balances. So you definitely should study how the money flows, and that's something that we could teach going maybe in the class going forward. But you want to study how the government moves because what you want to do is also create an economy for yourself. You want to be able to self bank. You also want to print money. You also want to, get money from the money that you're already making in dividends and stuff like that. So you have to think about it that you're trying to create your own economy, and now we have the technology to actually do that. So you want to think in the mindset that you want to be self sustaining. You want to work like economy. You want your family to move in a way that you can provide for everybody that's in your family. And if you don't have that wealth mindset, that do for self mindset, uh, that you can also do this mindset, you'll get left behind. So just think of that when you're learning also and doing your research. Just study how the government moves and how the money moves through the government. That's all I wanted to add.
All right, everybody. We thank my brother Darius for coming on again. Sorry about last week. I was out of town. Next week I'll be out of town too. But I will be online because that's a different type of trip. So I'm gonna be relaxing. I have my headphones and I'll make sure. Appreciate all you guys. Appreciate everybody who's gonna be watching on YouTube. Always appreciate my brother Darius for coming on. A lot of things are happening. Yeah, crypto is changing, but that's a good thing. So we just trying to make you guys make as much money as you possibly can. I know most of you guys' stories on here, so you guys can be really the change agents and really the generational changes in y'all families, to be the next millionaires, to really change the trajectory in your family, and that's all we want for y'all, really, because money really gives you the ability to change any outcome for anybody. It's basically a measurement of behaviors. And if you have good behaviors, really, you can, donate, help out with cancer, healthcare, whatever your family's got going on, religious, nonprofit organizations, you can donate to that. It just gives you so many possibilities. And we want to get y'all off of jobs. Me and Darius don't have to work jobs. We got businesses and stuff, but sometimes, we can wake up at 9, 10. Me and him, we go to lunch once a week and then, it ain't stopping nothing. So we want you to have the same autonomy and freedom and you can. Even with this government, even with however you vote or whatever, you can have that autonomy to live how you want to live. And nobody will be able to stop you, especially with this digital space that we're living in. You can make money so many different ways. And we just want to be able to show you guys how to do it and really how to keep it. Because as Darius know, and we're going to sign off, it's one thing to make money. The hardest thing is to keep it. Really, it's one thing to make 100,000. You spend $1 that 100,000, it's 99,999. You ain't got six figures anymore. So, that's the hardest game. So, We're going to teach you that, and we thank you guys as we're building this community for being a part of this community. And then me and Darius is working on something that we're going to tell you about soon, where we're going to do like a retreat, and we're going to go to a nice place and work on that, and we'll all be able to fellowship and congregate in a better setting. So we'll tell you about that and how we're going to work on that. So thank you guys. Y'all have a wonderful night, and we'll see you on next Tuesday.
Yes, sir. See you guys next Tuesday.